So DoorDash earnings, right? What is there to say? DoorDash, oh my God. Okay, so everything is great with DoorDash, according to DoorDash. Okay. Dash Pass customers up 50%. Monthly active users up 28% to 34 million users, individual users. They're getting into new verticals. So for all the Dashers out there, I just got my Uber shop and save, shop and pay card. Both these companies, Uber and DoorDash, are getting heavily into delivery, competing with Instacart from delivering groceries to everything else. And those orders on DoorDash and Uber Eats are paying a lot more than regular food delivery. Okay. So they're, like, how they do to attract drivers. They keep the base pay super high. Even if there's no tip, you're still going to make good money on these. So they're getting into that. They're getting into new verticals. Market share climbed to 60% now. So they took some more market share probably from Grubhub, who's deactivating drivers right and left for low acceptance rate. Gross order value went up 20% to $13.4 billion. Now, this blew my mind. They squeezed, Chris, you ready for this? 476 million deliveries into the quarter. Okay? Woo. Now, Uber did 2 billion deliveries globally. This company did 400, just deliveries. They have no rideshare. Think about it, 476. So somebody is taking all those 225, 250 no-tip orders. Okay, somebody is. And then next week, we have a very cool segment that we're going to do probably a lot of the show. This is gamification and gamblification. Don't fall for those diamonds and, all the bells and whistles, the casino stuff that they're doing. But obviously, a lot of people are. So 476 million orders. And however, ultimately, they ended up losing $652 million, more than anybody expected. Why? Because they took over this European supermarket or delivery chain called Wolt, or WOLT. That acquisition is kind of dragging a little bit, but they're saying we're going to integrate everything. However, according to the company, everything is going great. These numbers are fantastic. Of course, stock went down 10% after that. Nobody's buying it. I listened to it to Tony Zhu and all his buddies. They said macro conditions are suspect. They don't know what's going to happen. The other thing they said, the new customers, okay, are contributing to gross order value more than older customers. But because of the Dash Pass, which is the same as Uber One, that's growing, leaps and bounds, right? And, they said consumer health is stable. They're seeing more growth and more losses going forward. There you go. Nice and short.
So if you got to sum this up real quick into what does this mean for drivers or DoorDash drivers, what would you say? What would you say to them?
I would say, look, if they squeezed in 400, and they have, by the way, they said they have 3 million Dashers. 3 million. This is just DoorDash. So that means a lot of Formica out there grabbing those 225, 250 no-tip orders. Okay? Please, right here, just decline. Okay? Because you're not being profitable. Now, that's my opinion. They may say something else. But they have a lot of these, DoorDash is probably the most gamified and gamblified app out of all these apps. Uber's is less, and they've created a lot of new programs, pay by hour, which Pedro tested in St. Louis successfully for himself, but every market is different. They're offering a lot of these things like called diamond zones, high pay order programs. Your acceptance rate has to be here. There's a lot of bells and whistles going on that app, and it's working obviously. But for Dashers, 3 million Dashers, and if that's not oversaturation, I don't know. I mean, there's a lot of Dashers out there. And we talked about this in the past. I think, look, gig economy is what it is, what you make out of it, and know your worth. Don't take 225, 250 no-tip orders. I mean, that's my advice, but you guys maybe have a different ideology about going, I'm never going to tell you what to do, what not to do. I wouldn't do it. I have DoorDash. I'm not going to take a 225, 4-mile no-tip order. I'm just not going to do it. That's it.
Yeah, for sure. Yeah, that's the whole point of Know Your Worth, right?
Yeah, man. Know Your Worth right there. Next week, you guys may see me wear a Know Your Worth t-shirt, by the way. So,
Yeah, but this raises the point, or actually, this raises a question. We talked about maybe a few months ago, definitely. Maybe it was actually the last quarter earnings call, where we're talking about what does it look like going forward for these companies when it comes to orders. Do we think the orders are going to shrink? Do we think the orders are actually going to increase? Especially with just the global economy, how things are tightening up, how people are, spending less. This doesn't seem like they are spending less on food delivery at all. It seems like they're spending more.
No,
And
I mean, look, man, 34 million new existing customers, up 28%. Dash Pass members go from 10 to 15 million, up 50%. So people are taking advantage of the subscription systems, getting some free, delivery on certain stuff. But they were beaming about the new verticals. Like they have deals now with Dick's Sporting Goods, with Sephora for makeup, for a lot of, they call it their verticals, especially now they're getting into supermarket deliveries and anything and everything. Basically, how Uber says, we deliver, we take you anywhere, whenever you want, we bring you anything you want. Well, this is the same thing, except on the delivery side only. But they're clearly the market leader with 3 million dashers and 60% market share. That's massive, right? You can argue with that.
What's the percentage that DoorDash and Lyft make it together in some sort of merger going forward? Because I don't think Lyft is going to be around that much longer.
They spent $8.1 billion buying this company called Wolt from Europe to kind of go global now as far as deliveries are concerned. I don't think DoorDash is interested in Lyft. And nobody asked that question, but I'm just kind of guessing that I don't think they are. The money-losing business, they're still losing money, by the way. They lost $652 million with all the plus numbers, positive numbers. So, but the reason they're losing money is we talked about on the other companies, stock-based compensation issues, and that's going to continue. If the stocks keep going lower, Uber's report came out, stock went down close to 15%. And that's as good as a quarter as you can put together, okay? This company put out a great report. Stock goes down 10%. Now, with all these positive things, they're still losing money. I don't know. Maybe they're just not good. There may be good business models, but I don't think they're good businesses to be in. So there you go.
Yeah, it'll be interesting to see, though. But to me, it was kind of surprising. The one thing that I thought was actually really surprising in the whole thing was that there were more deliveries that came around during that quarter, even though the economy has kind of suffered. So I don't know if people are like just getting free money somewhere or what's going on there, but I don't know how they're continuing to spend that money to order out all the time.
One thing that could be, Chris, is that everybody's getting their tax returns, so they're blowing their money, maybe on food delivery. I'm not sure, but 476.
We're talking about last quarter. We're not talking about
orders.
Yeah, we're talking about last quarter, though. We're not talking about right now where people are finally getting their checks back.
Yeah, but I can tell you that I do deliveries as well. The pace has picked up a little bit last 2 weeks to 3 weeks. It was completely dead in January. It picked up a little bit in February. 476 million orders, a lot of orders, and there's a lot of 225s and 250s in there because the new customers probably are non-tippers, and but they're getting the food delivered somehow, man. I don't know. Other than that. Look, I'm not an investment analyst or nothing like that. These earnings reports were as glowing as possible could be, except Lyft, the big tree, little tree thing going on there. But hey, man, you gotta give these guys kudos. Although at the same time, by the way, all the three founders of DoorDash announced that they're each selling close to 2.5 to 3 million shares of DoorDash. They have these preset programs, so don't say that they have inside info or whatever. And oddly enough, the company announced a $750 million buyback. So companies saying our stock is cheap, we're going to invest our money instead of new businesses or in dashers or whatever, not in buying our own stock back, because that's basically telling Wall Street that we think our stock is cheap, we want to invest in it. And then on the other hand, the three founders, Tony Zhu, Stanley Tang, and one other dude, they decided to sell 2.5 to 3 million shares. Okay. I guess they got to take a couple $100 million out of the company. So that's it.
All right. Thanks for watching. That short little clip was from our live stream, Show Me the Money Club with Sergio and myself, Tuesdays, 6 p.m. Eastern, 3 p.m. Pacific. Make sure you subscribe, turn on all notifications so you'll be notified when we go live, as well as all of our awesome content. Make sure to check out this video right here, which will take you to the entire live stream, or check out this video right there. All right, drive smart, everyone.